Start off by discussing cement, given that there has been the news with respect to Ambuja Cement of Penna Cement for about 10,000 odd crore rupees, clear consolidation taking place. What does this spell out for some of the smaller players given Penna's dominance in the south?
I have one. So there are two things to it. One, the industry definitely is getting consolidated. However, it's not getting consolidated in a manner where only two, three players are going to dominate. So I think there are going to be at least five, six dominant players in India. And to that extent, the performance of the sector then comes down to how the pricing environment is and the demand supply is. So overall demand supply outlook over the next couple of years doesn't look so good because supply increase are very rapid, demand increase has been subdued, and companies have been unable to increase prices. The only thing working for them is low input costs, which is helping them maintain margins. Now, coming to your questions of the for the smaller companies, so the buyout candidates then become uh, would trade at valuation which should be higher than what fundamentals demand because uh, obviously, many of the larger players are trying to buy out the smaller ones at when as their cash flows are strong at this point of time. So the smaller companies, I think, because of this M&A, will get a leg up.
And that's exactly been the case of late as well, right? Shivangi, hi, welcome to the show. Any cement charts that are looking interesting to go further along from here?
Hi, very good morning, and thank you for having me. So, of course, cement stocks have been, showing a lot of strength. But my focus is on the infrastructure-related counters. Now, be it Cummins or Siemens or, for that matter, L&T. So these are the stocks which are on radar right now with the, of course, latest government development as well. And we've seen that these stocks have shown a very smart recovery from the previous week's fall. And right now, if we shift focus to L&T, this stock is trading above its key exponential moving averages with good amount of longs being built up over here. And the stock is looking quite promising from these levels. And there's a steady buying happening over here. So it looks good for 38.50 levels on an immediate basis with a stop near 36.30 odd level.
Okay. Meantime, let's also get in a take from you then, Sandeep, as to what the outlook is on some of these multiplex players. Given the kind of dominance that we're seeing with OTT, it seems like F&B is the only thing that's really working for them. Of course, limited to the listed players, but what's your outlook on fundamentals?
So I think it's a interesting space right now at the current prices. So obviously, PVR Inox is the only real play which we can make. Because this industry, like from a growth industry, it's become more of a cyclical industry now where you have to play for cyclical up moves, which could also be quite significant, 20-30%. So recently, what we've seen is that some of the smaller ticket movies have been doing decently well. Some large ticket movies, which could be potential blockbusters, are planned for the next few months. So I would think that as a contrarian opportunity, it offer PVR Inox does offer value for a 20-30% kind of upside over the next couple of quarters. And at that point of time, we need to review again whether it remains cyclical or we can hold it as more of a growth stock.
Sandeep, want to revisit what we were chatting about just last, afternoon about the sugar names, that is. Because, while most people dumped the sugar names when that government flip-flop kind of happened last year, now with the MSP price hike, you think fundamentals could massively change and could we see a re-rating come by in the sector?
And so I think there has to be some initial move which is going to play out as the ethanol story is getting reiterated by the government. Now, the subsequent triggers will be if sugar exports are allowed, which they should be ideally, but then we don't know what the government does. So, if sugar exports are allowed, I think that will create another positive. And as the ethanol sourcing uh, uh, tenders, etc., come out over the next few months for the next season, and if we see a significant jump up in that, that's another positive trigger. So when we balance negatives and positives, on balance, the positives outweigh negatives by a significant margin at the current prices. And these stocks have consolidated for the last 4 years. If you actually see, last 4 years, stocks have gone nowhere despite fundamentals improving. and we could see upsides in across the board in this sector.
Sandeep, an interesting move now by Jeffries. I mean, Chris Wood has removed HDFC Bank from their long term portfolio. That, of course, happened earlier. But the latest addition is GMR Airports. Have you been tracking this story?
I think these momentum allocation changes don't trust me actually. So, but specifically on GMR airports, we've been seeing GMR airport results improve quite significantly. But but then still for it to have equity value or not is a question mark. So I think that we'll see over time.
It's an interesting take with respect to the banking sector, and just want to know where you stand here, Sandeep, in terms of what you expect could be the road ahead for some of these large cap private banker names. Are they likely to see continue to hold out, given that it has been pretty choppy of late?
Sivan, there are two big sectors which people used to own historically, uh, IT and banking. So IT has been going through its own trouble, so IT is not as overowned right now. But the banking sector, the financial sector overall continues to be very overowned among investors. And I think that's the challenge for the performance of these banks, where the ownership is so much that and it's tough to come out with positive triggers from here on. Like the balance sheet's absolutely clean, growth rates have been strong. So from here on, uh, asset quality cannot improve further, and margins will remain stable to slightly lower. So I think that's the challenge banks are facing. That said, many of the larger banks will do well as the economy keeps on growing. And to that extent, I think all these large banks, be it Axis, ICICI, Kotak, HDFC, all will do well. Now, which stock we want to buy, that we have to decide.